And welcome to the Geeks of the Valley podcast, which connects with some of the brightest minds globally who are leading their respective industries today to discuss some of the hottest upcoming industry trends and how their work is affecting the global economy. Today from Singapore, we have Darren Chu joining us, the founder of Tradable Patterns and ex-representative at the New York Stock Exchange. Darren, thank you for joining us. How are you today?
Hi, Kunal. Thanks for having me in. I'm doing very well. Thank you.
So Darren, how did it all start out for you? What was the process like up until becoming a trader with Tradable Patterns and a founder of that firm?
Well, as with any lifelong journey, it was full of ups and downs. And, initially, I guess what kind of sparked my interest in investing or trading in the first place would have been just some business ed class way back in grade 10. I'm sure you may have had a similar class where we just had the opportunity to create a virtual portfolio. So we just chose some stocks and we tracked it over the course of maybe 3 months. And it was pretty exciting just being able to see that we were able to make virtual profits quite a bit more than, what I was used to making at McDonald's at the time through my part-time job. So that really excited me, but obviously I didn't actually invest in real stocks until, hopefully this doesn't date me too much, but it was in the late 90s. I believe it was 97 that I actually had enough saved, and I basically started buying. I think it would have been some mining stocks initially, and because the tech boom in U.S. stocks was really roaring in 98, 99. I really caught you could call it the junior tech stock craze that was happening at the time. And, that's very similar to what we've seen with...
the dot-com boom, right?
Yeah, pardon
me? The dot-com
Yes,
boom, right?
Yes, the dot-com boom, very much like what we've seen recently with crypto in 2017, right up until late December and into the crypto winter. So I've gone through a few cycles, but I guess just coming back to your question of what got me into Tradable Patterns. So, I had a fairly long career with a few traditional futures and options exchanges, starting out in Toronto with the Montreal Exchange, which now is part of the former TSX or Toronto Stock Exchange. Now it's just called the TMX Group, Toronto Montreal Exchange. And after having a couple business trips to Singapore back while I was still with the Montreal Exchange, I got really excited about the idea of actually living in Asia. And so I eventually moved out here, and that was in May 2010. And that was to join NYSE, the New York Stock Exchange, but working for the London side. So the London arm is was known as LIFFE, LIFFE, which just stands for London International Financial Futures Exchange. So unlike a stock exchange, or unlike the New York Stock Exchange specifically, LIFFE was a brand name that just wasn't that well known, other than if you were already in that space trading LIFFE products. But, for most people around the world, I mean, even my parents who by no means have a financial background, they are obviously familiar with the New York Stock Exchange. So you don't really need to, as a marketer or a salesperson for NYSE, generally the focus would be on, markets that are less well known or perhaps need a little more education. And so that was my role, and that brought me to Singapore. But eventually, after almost 3.5 years working with NYSE LIFFE, we received a takeover bid from ICE, Intercontinental Exchange, and ICE.
That's impressive.
Yeah, well, it's quite something to go through a takeover. So obviously, my remit grew after the takeover just because there was some loss in headcount. And so instead of actually just looking after the territories I was assigned initially through the life employment, which was Australia, India, and the UAE, I actually was given all of APAC, ex-Japan, Korea, for life business development after the takeover from ICE. So that was a lot of fun. Mm-hmm. But I guess what I would say that really kind of segued into what I'm doing now is I used to visit loads of hedge funds and prop trading groups, as well as commodity trading houses, mm-hmm. and also all the tier 1 and even tier 2 investment banks. And so throughout all the visits I used to make with all these clients or these prospects, I discovered that a lot of them actually didn't. No, I'm referring to traders here, okay? Sales traders as well as prop traders. I just okay. realized that a lot of them actually did not have a solid grasp of technical analysis, and that's mm-hmm. something that I actually had to teach in a previous job that I had in Toronto, where I had to train our clients on how to trade. And obviously, while I was with life in certain markets, such as India, I delivered quite a few training sessions to professional traders, full-time prop traders. And so what I realized is there was an underemphasis on technical analysis within a lot of the investment banks and hedge funds and even prop trading groups that I had been visiting. And so I just thought, okay, it appears that a lot of these traders could have a much better edge if they were aware of these different strategies, which I believed worked. And then, that was really just through a lot of observation. And, throughout my career with the exchanges, I had always been trading on the side. So I had always experimented with the technical analysis to the point where I was comfortable coming out of the corporate world and trying something completely different, which is to create, you could call it a research analytics business, but it's really trading ideas, which I publish. So through Tradable Patterns, through my website and through my distribution that I get on Bloomberg, Terminal, Refinitiv, Icon, and for those who aren't familiar with these names, Refinitiv is the former Thomson Reuters, right? So,
yeah. Right.
So these are big platforms, and it was a bit of a plunge, but the ride's been quite rewarding in many ways.
Okay, and you talk more about trading patterns and perhaps some of the followers you have from top banks.
Sure. So currently, just through the distribution that I am able to access on Bloomberg, Terminal, Refinitiv, FactSet, I'm currently getting, basically every one of the top 10 investment banks coming on at various points each month. Yeah, so wow. so it ranges really.
Wow.
I mean, we have I guess through those three platforms, I have pretty wide reach potentially. So the distribution right now, it's probably 40% residing in the States, 30% in UK, Europe, and 30% here in Singapore. And that's really what I'm seeing, at least from the institutions. And in so far as the buy sides go, I'm very happy to actually share that just as of mid-July, just about a month and a half back, BlackRock started coming in as a daily reader of my content.
Really? Wow.
Yeah.
And they're one of the biggest investment managers out there, correct?
Yeah, they're actually the world's biggest asset manager. So that was a real win. And although
congrats, Jeff.
Thank you. So although it's taken a long time to get to this point with the business, but I can really see that the momentum is finally picking up with the likes of BlackRock. But I also have quite a few other hedge funds coming on every single day. So you may have heard of names like Renaissance Technologies or Two Sigma,
of course.
Or even Citadel. Mm-hmm. So these three of these latter names that I've just mentioned, they have been downloading my content since my very first day of being on Refinitiv icon. So very happy about that.
Okay, interesting.
And I mean, a lot of these hedge funds that are coming on are the big data quant algorithmic trading funds, right? They tend to be trying to model trading strategies based off of my newsletter, essentially.
Okay.
I'm very happy to see, because I know you had mentioned some time back when we had a conversation that you've been building this business for 5 years, and finally something is coming out of it. And these big firms such as banks, hedge funds, venture capital funds are all signing in to see your research. That's huge for you, because you're able to kind of see and predict, what the markets are looking at like down the line. And so that's a huge opportunity. I'm really happy to hear that.
Thank you.
The one thing that I wanted to kind of pivot here is, based off all this kind of research that you're doing, what does it look like when you see market trends globally, from Asia Pacific to US markets to the Middle Eastern or European markets? Where is it that you're seeing the most movement trending?
Well, right now, there are a few pretty significant macro trends that are happening, where with a lot of the trading volumes that exchanges are seeing, such as where I used to work, a lot of that is being accounted for by algorithmic trading outfits, high frequency trading firms, for instance, and a lot fewer manual traders are actively trading the way we used to see. What I would say, though, just on that point, is that the role of a good human trader, I believe, is still very important. I do think that the discretion that an experienced human trader can make on important calls will still be much needed, because most of what the algorithms are doing these days is more around the transactions that might be what's generally described as low latency. So there's a lot of arbitraging that happens where these high frequency trading outfits are really just trying to pick up a few ticks here and there per trade, but multiplied by large volumes of whether it be shares or futures or options. But within the course of every day, you can pick your market, whether it's gold, oil, Bitcoin. There will still be significant directional moves up and down, not as a result of the algorithms necessarily, but rather as a result of just macroeconomic events. And in the case of Bitcoin, obviously there are some technology considerations as well. But that big swing up or down twice or three times per 24-hour cycle per market, that's always going to remain there, regardless of how many HFTs, high frequency trading outfits, are active in each market. And that won't, that series of big ups and downs will never be arbed away. So I do feel there's going to forever, for as long as I'm trading, at least, there will be there will certainly be opportunities for good human traders. And
in your perspective, just to add in, like in your perspective, right? Human traders, they just have this natural instinct versus maybe bots making the decision, right? And I think this is something that the Saudi oil issues, right? Being able to react on the fly, and with bots, they don't know what's going on unless you tell them to do it, right? I would imagine human has the sense of maybe this feel and touch from trading the markets.
Absolutely. So the only reason I created my business in the first place, to be very honest, is, apart from feeling that a lot of these traders who I used to visit were perhaps less knowledgeable of technical analysis, I also felt that there was an extreme swing in the pendulum towards this race towards building bots and quantitative strategies. I just felt that it was overdone. And as with any massive swing in a pendulum from one end to the other, whether it be the way compliance teams have just mushroomed within banks.